Hi, everyone. So today I'm joined by Shakina Higgs in Texas. Hello, hello, hello. We're running,
On.
yes, talking about 203K FHA loans. Um, so Shakina, I know you've been getting like a lot of questions about these loans. Tell me what you're seeing like in your market.
Yeah, so what I'm seeing here in Texas is, of course, we have a lot going on here. We have a lot of people moving into the state, and we have a lot of new construction. So the kind of the hard points that I'm having on both the seller and the buy side with my sellers, their direct competition is new construction. And then with my buyers, it's sometimes easier to go that new construction route because everything's upgraded, there's less maintenance. But I have buyers that truly would like an older home because of the charm. So I just wanted to find out more about the renovation loan to give them an additional option so that they don't feel forced into that new construction.
Yeah. And then I hear in California, like a lot of people are priced out of the market just because of it's expensive here, especially here in the Bay Area. So this is a great alternative for like a first time home buyer. Oh my gosh, I can't even speak today. A first time home buyer who's like it gives you an option to go for a house that has less competition, is not as pretty, but then you can make it the way that you want. And sometimes you can do that spending less money than what it would cost to get that house if somebody else did the work. So it's always a great option. So yeah, let's hop into it. We're going to answer some questions for you guys. If you have any additional questions, like feel free to reach out to me or Shakina, and we'll answer all those for you. But we think we got most of the most of the questions that you would ask together. But I guess we'll see if there's anything that we miss on here. So yeah.
All right. So I guess my first question in general, like that I get when I bring up a renovation loan, my buyers are, well, what is it and how does it work?
Yes. So the FHA 203K loan, think of it as a home loan and a renovation loan rolled all into one. So instead of you having to go get the renovation loan or get a HELOC or something like that to fund any renovations after you purchase the property, you're actually going to have the purchase price plus your renovation all wrapped into one loan all together. So it's a one and done type situation.
Okay. So is it different from a traditional FHA loan or is it one?
Yeah. So a traditional FHA loan, you're buying the house as is, and that's the full financing. So you come in, the house is $300,000, let's say. That's all they're giving you, period. But let's say if you do the FHA 203K loan, if the house is $300,000 and it needs $50,000 worth of work, your loan amount is now $350,000. So they're already putting that renovation budget into your loan, so you can get all of that work done.
Okay. And I guess one thing too, if we can just go ahead and clear up, because I know I do have investor clients, and the first thing that I'll get is, well, can I do this as an investor? And of course, that answer is no, but can you explain a little bit more?
Yes. So this loan, it has to be your primary residence. So similar to the FHA loan, when you use that loan, you do have to live in this house. There are other renovation products that we have for investors that are looking to either turn it into a rental or sell it or something like that. But this one, you do have to plan to live in the house.
Okay. And are there any limits or restrictions on the type of home that you can use this type of loan for?
So yeah, so the single family home is the most common. However, some condos and multi-unit properties do qualify up to 4 units. So you can do this with like a fourplex or a duplex, but you do have to live in one of those units.
Okay. And what about, I guess, the limits on the actual construction? Is there a minimum or a maximum? Like if I have a client that they love the home, but there's just one bathroom that's horrible, what does that look like? Are there any limitations as far as the actual renovation?
Yeah. So when you think about it this way, right? So anything that is needed for you to live in the house is approved. There is a limited 203K loan, which is for like minor cosmetic things, like you're getting new flooring, you're changing out countertops, things like that. Now, when you get into the structural foundation work, you're going down to the studs, things like that, there's a standard 203K. So both can be done. And most things are approved: HVAC, plumbing, electrical, all of that kind of stuff. What will not be allowed is like your luxury improvements. So think like you cannot add a pool or an outdoor kitchen, or I know everybody loves pickleball. You can't add a pickleball court. So it has to be things that are like functional for you to live in the house, not just like, oh, this is nice to have type thing.
Okay. But what if the home has a pool that's in bad shape?
If that's already part of it, then depending on the lender that you go to, you may be able to get that approved, but you would have to put that through underwriting because technically that is like a luxury item. So you might not get that. Like if you need the whole thing resurfaced and stuff like that, they may not approve that within this loan. You might have to do that separately.
Okay. And I know you mentioned that it has to be something that's required for you to live in the home. So how does it work? Like if you want to add additional square footage?
Yeah. So structural additions are allowed if they meet the FHA guidelines. So even like an ADU is another way to like add square footage, but it might be like detached. As long as it's like within the local building requirements. Every project's reviewed individually. So it's important to discuss those early on. Because for instance, like if you're building an ADU because grandma and grandpa want to move in with you guys, that's something different than, hey, I want an ADU in the backyard because I want to rent it out. So it is case by case basis. And then just adding pure square footage to the house is doable. So like, oh, I have 2 bedrooms, I need to add a third one because I have 3 kids, is something that they more than likely will approve.
Okay. That makes sense. So we're talking about like what the loan is, and what's allowed and what's not allowed. So what would you say that the ideal buyer is for this type of loan?
So just like you were saying in the beginning, like someone who like really appreciates the character of a house, they're not really into the new builds, they want to make it their own. Also someone who's like has bid on 6, 7, 8 houses and they keep losing, right? This is also an option because a lot of the homes that you would do work to, right, are ones that have probably either been sitting on the market or there's not a ton of competition because not everybody wants to go in and do the work. So it's a great way to like go through the buying process and not have like 12 counter offers that you're up against. But anyone who's like willing to go through the process. And one of the good things about it is that you have up to 12 months to move into the home. So it doesn't have to be a stressful, like, oh my gosh, I only have 60 days to finish like all of these renovations that I have to do. They give you time, to fix that. And you can roll in your payments into the loan so that you don't actually have to make a payment out of pocket until you move into the house.
Okay. Now, as an investor, of course, like this loan excites me because I want to get in, make the changes, get it to where I want it to be.
Yeah.
So this would, I mean, this sounds great. So with talking about that, would you say that this loan is appropriate for a first-time home buyer, an experienced buyer? It really doesn't matter. It just matters what they're looking for.
Yeah, so it can be a first-time home buyer or anyone who qualifies for FHA financing, which means you have not owned a property or had ownership in a property for the past 3 years. So the reason I say had ownership in, if you were a co-borrower on somebody else's house or you co-signed for someone else, but you didn't live there or something like that, that is considered ownership. So you'd have to wait 3 years after you're off of that mortgage or deed or whatever that is. But no, this can be for anyone. Yeah.
Okay. Sounds good. So let's talk about the money part of it, which is another, of course, a huge concern with purchasing a house in general. So how does it work when you have the renovations and the budget for the renovations is built into the mortgage? how does that work out for the buyers as far as paying for the renovations?
Yeah. So once the loan closes, the additional renovation money is going to go into an escrow account. And so the draws will come out of that. So unfortunately, they're not just going to like give you a lump sum of cash to go and pay the general contractor. They will hold that money. And then as the stages of the project are being completed and they've been reviewed, or if you're doing an improvement that does require like a permit and you have to have an inspection. So think electrical, plumbing, all of those, like before you can move on to the next step, you actually have to have an inspector come out from the city. So once those inspections are passed, then they'll release those draws of money. Both myself and Shakina both flip houses. So if you have any additional questions on like what different improvements need permits, which ones don't need the inspection and stuff like that, we can answer those questions for you as well.
And it sounds like this loan protects the buyer in a sense because the lender's holding those funds in escrow and they're protecting the buyer by making sure that the work is done appropriately before releasing the funds to the contractor. So that's another a plus, a huge plus, especially because
1,000%, yes, because everyone has horror stories working with contractors,
especially here in Texas.
Yeah, and especially like think about it, if you are a first-time home buyer, like you've never gone through this process before, and then that's another level on top of it where you're like, if the contractor runs away with my money or this or that, they do assign you someone to your loan. Think of it as like a project manager, and that person is who's going to approve for the draws to be released. So then it doesn't even have to be you like fighting with the contractor if something doesn't look right. They're not going to release the money unless it looks right or it's past the inspection. It kind of puts the heat off of you, and it's on to someone who's had the experience. In order to be assigned to your file, they have to have done this for years and years and years.
Okay. So with that, who's responsible for selecting the contractor? Is that still left up to the buyer? So the buyer has a say of who they want to hire, but then the lender just manages kind of the funds and the release of the funds.
Yes. So while you're in your escrow period of purchasing the home, the contractor that you want to use has to be vetted. So there's a whole form that they have to fill out with their license, their insurance, like all of that kind of good stuff. And the lender is going to go through that and kind of approve it. They also have to have worked on a house that is within the price range of the house that you are buying. So for instance, let's say you're buying a house that's, I don't know, $700,000 and you want to put $100,000 of work into it. If your contractor has never done a house that costs more than maybe $450,000, they may not be approved. So they are looking for a certain amount of years of experience, and then also within the price range that you are buying in. So that's like, the subject level expert contractor is kind of what they're looking for.
Well, that makes sense. And that's great. Again, like I said, protection for the buyer. Okay. So when I talk to buyers about renovation loans, oftentimes it's like another language. It makes complete sense to us because we're investors and this is what we love to do. But I really feel like it's just, there's not enough education out there about this type of loan. But coming from your side on the mortgage side, what's been kind of the biggest misconception that you see from buyers when it comes to renovation loans?
Yeah. So like people assume that this is for the house that like needs to be torn down. That's like literally on its last leg falling apart. In reality, it can be used for houses that like, does the kitchen need to be updated? Do your bathrooms need to be updated? Like it doesn't have to be this major renovation. It can be something that's just light, cosmetic, like you said, in those new builds, they're like the new bright, shiny toy, right? So maybe you want the quartz counters and you want to change up the tile in the bathroom. It hasn't been done since the 90s or whatever. Like
you still want the mature neighborhood. So you don't want a new build cookie cutter neighborhood.
Exactly. So it can be done for light, but it can also be done for like foundational work and things like that. So there's so many things that you can do within it, which is great. And it's not as complicated as everyone thinks it is. It does sound, like you said, it does sound scary.
Yeah.
There's a lot of crazy lingo, but like it's really not. It's really fun. You get to go in and pick your finishes. You get to, really see it come alive and make the house your own. Because even when you go into, for instance, like a new build, like when I was shopping for homes, my husband and I toured a couple new builds, and I was like, oh, I love this, but I don't like that. And for me, I would feel so bad tearing out something that's literally brand new. And it's like, oh my God.
We see people do that all the time. They just get the standard in a new construction, and then they go through and take everything out and upgrade it.
Yeah, and it's like, I'd rather just go with an older house where it's like I can rip it out and I'm like, great, these were falling apart anyways, instead of like these brand new cabinets and I'm like, all right, sledgehammer, let's go. So
and then with the older ones, you can build equity.
Yes,
you can build equity so much quicker doing that. Like you can upgrade them and go in with 50,000 in equity and have the pretty home in the inside in the mature neighborhood that you want it. So
yeah, that's one of the biggest points, because the home value is determined by what the value is when you're buying it. And then the appraiser is also going to look at what additions and improvements you are planning to do, because you will have to have your whole scope of work when you're applying for the loan, right? You'll have to go through that and put all that down so that you can get a price for your renovation. And they're going to give you an after improved value, or if you hear investors say ARV, after resale value. And that's how they're going to make sure that the loan, right, there's enough collateral for the loan. However, putting in these upgrades, depending on how you do it, you could be walking into equity on your house because you did such a great job with this renovation. And now you already have additional equity that you may not have had if you bought that $300,000 house that was just as is.
Right. And I'll say, especially if you have a realtor or even your contractors that are familiar with the area, that can guide you to make sure that you make the appropriate renovations and to not over improve the house.
Yes, that's a big thing. If you've for a long time,
excites me.
Yeah, like if this is your end all be all house, great. Go crazy. You're doing it for you. However, that is something to think about. Shakina brought up a really good point. That is something to think about when you're going into this, that you don't want to over improve for your area, because if there's no comps to support that, when you do turn around to go sell it, you may not get your money back for what you spent putting in a certain item.
Alrighty, so let's see. So why is it important? I mean, I completely understand the importance of this loan as a realtor who also invests. But what would you say, like, for other realtors out there, and like, why is it important for us to start to get the more information out about the 203K or other renovation type loans?
Yeah, I think with the landscape that we are in the real estate market right now, like we all know interest rates are high, and that brings affordability down. So although our house prices are dropping, it's still, you can afford less house with a higher interest rate until you can refinance that into something lower. So if you can't afford as much house, this is a great alternative where you can get an under market value home and then make the renovations yourself. A lot of times, like when somebody else does the work to the house, or for instance, like a new build, they're going to charge, it's a business at the end of the day, right? They're selling the house to make money. They're going to charge you the amount that makes them money. Whereas you can go and put in some of these improvements and you'll be surprised where you're like, this is actually a lot cheaper to do than I actually thought it was. And you can save money getting your house the way you want it with different deals and the tiles you pick out, or getting remnants instead of larger countertops. There's so many ways. And when you have a realtor like Shakina, who also flips, she can tell you some of those deals and some of those places to go and all of that, so that you can save money, but you're still going to get a great product at the end.
Right. And with that, with the 203K loan versus a traditional FHA loan, is there a difference in rate or a significant difference in the interest rate that they'll pay on the renovation loan versus the traditional loan?
It's all dependent really on your credit. That's why I'm like, I don't like to quote rates unless we're talking like specific files. But no, it's not a huge difference. And yeah, it's not a big like jump because they understand, right? They're putting the protections in place
Right.
to make sure that, the contracts are paid through your project manager and everything like that. So it's not really a risk. It's just a higher loan amount. And
Right.
so when you see the higher loan amount, sometimes they carry a higher interest rate. Obviously, like a $250,000 loan versus $1 million loan is going to carry a different interest rate. You're borrowing more money.
Yeah. So it's not just because of the loan type. It's just in general, like you're looking at the entire package or before that rate is assessed. Okay. Yeah. So that makes sense.
Yeah.
Okay. And can you give us one example of maybe mistakes that buyers make when they do go into this type of loan?
I would say the biggest thing is like waiting till you find that perfect house to talk to a lender, because there's so much that goes into a loan like this. This is something that you want to get pre-approved before you start looking. And then you want a lender that's going to break down this entire process and what this is going to look like. You also, if you're looking for a home that you might want to put work into, it's good to already start interviewing some contractors. That way, when you do go to make an offer, you know who you're going to use and who you're going to put on the file, because yes, there may be less competition, but that doesn't mean there's no competition. So if you have to move quickly to put in an offer and you're just now talking to a lender about it, there's a lot of stuff that goes in it and a lot of considerations. You don't want to be rushed and you don't want to be stressed out during the process. So I would say if you're even thinking about it, talk to a lender, get all of the information about it, and then start shopping. That way you know what to expect.
Okay, no, that makes sense. Right. So first step is to reach out to a lender.
Yes.
Well, call me first. Call me first and then reach out to, I'll get you in touch with the lender.
Yeah. The real estate agents usually have great lenders that they've worked with before that are familiar with these type of loans. And you do want someone that's familiar with this type of loan because it does have, a little bit of hurdles and things to go through. It's just a little bit different than a regular loan. So you do want to talk to someone who's done one or has, the knowledge of how to do one. So it's a nice, smooth process. There's nothing crazy. If you can find a realtor or a lender that does renovate homes, it's a big help, I will say. Like Shakina has contacts probably for every single part of the house that you need to get updated, deals on where to find things. And then it's also like you said, not overdeveloping for the market, what types of materials are great to put in the house, which ones are durable and that kind of stuff. Because you want to get the biggest bang for your buck, right? You don't want to just like buy something and it's going to break after you spent all this money and went through all that. So, yeah.
Well, thank you so much. No, this has made a lot of sense. And like I said, it's something that here in Texas, I'm seeing more and more that there's a need for it, but every time, that I bring it up, it's just, there's a lack of education. So it's something that I've really just put on my to-do list to make sure that I educate my clients and get the information out there, because everyone deserves to know that this is at least an option. And then, if they decide to go with it, yay. If not, yay. Like I'm okay. But I just feel like I would be doing them a disservice if I did not explain, how this worked and could, this also house hacking, like your very first house, like,
get a duplex, live on one side. Yeah. And it's like the more you know, the better decision you can make, right?
Exactly.
And Shakina, what areas in Texas do you cover?
So I am primarily in Fort Worth, Texas, and the surrounding areas, but we flip anywhere in like the North Texas area. So.
Okay, perfect. So look, I know Texas is humongous.
And then I even sold a house in Houston too, but that was family. Like I don't purposely go to Houston. It's like 4 hours away, but I have sold and helped with a purchase in Houston before because I have family there, but primarily in Fort Worth and the surrounding areas here.
Okay. And then how do potential buyers get in contact with you if they want to look around your area, they're interested in this type of loan, they know you're the expert? How do they call you?
Oh, yeah. So you can call me or text me at 469-688-2625. You could also email me at shakina@buysellfortworth.com. And then also I'm on all social media platforms as Shakina Higgs. So you can find me there and DM me.
Sweet. Thank you so much. For me, I am obviously a mortgage broker, so we've got about 120 different lenders that we can go through and find you the perfect program, the perfect rate. You can contact me at 909-331-6472 or martiana@empirefy.com. And we will leave all of our contact information in the bio if you guys want to know more. If there's something that we didn't cover, if there's additional questions that you have, reach out to me and Shakina. Like, our whole goal and why we're in real estate is to educate. It's not, yes, we're here to make money, but it's not just about making money, right? We're here to educate. That's one of our passions. And so if you have questions, like, reach out. Even if you're not looking right now, it's better to know and have someone that's willing to kind of walk you through what that home buying process looks like, so that when you're ready, you feel confident, comfortable. This is probably the biggest purchase you will make in your entire life. So we want to make sure that it's a smooth and great process, not a stressful one.
Exactly. Well, thank you so much. And thanks for having me on.
No problem. Thank you.
All right.